everyone. Welcome to our webinar. It's all about stocks today. Since we're heading to the end of the year, there is some seasonality, especially during December and January. Seasonality was in general the theme um, uh, in the last few in general the last quarter of the year, with some months being traditionally the weakest of the year or the strongest of the year. But we're gonna see everything in detail in today's webinar. So before I start the session, as usual, I would like to make sure that you can hear me loud and clear. So let me just until you give me feedback, I'm gonna go through the disclaimer warning as usual. Don't forget that for anything you need, any help, we are here. So you can contact us via email at webinars@hfm.com. Our support team, me, Stuart, in general, the whole analysis team is here to help you guys. So anything you need, regardless if it's about the webinar, in general, anything you need in regards to your trading or anything in regards to around the industry, we're here to help. So don't hesitate to contact us. So until I got the feedback from you, I'm going to go through the disclaimer warning just quickly. This material provides general market communication for information purposes only. It does not constitute independent investment research. Nothing in this communication contains or should be considered as containing investment advice or an investment recommendation or a solicitation for the purpose of buying or selling of any financial instrument. All information provided is gathered from reputable sources, and any information containing an indication of past performance is not a guarantee or reliable indicator of future performance. Users acknowledge that any investment in leveraged products is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk, for which the users are solely responsible and liable. We assume no liability for any loss arising from any investment made based on the information provided in this communication. This communication must not be reproduced or further distributed without our prior written permission. Risk warning: trading leveraged products such as forex and derivatives may not be suitable for investors as they carry a high degree of risk to your capital. Please ensure that you fully understand the risks involved, take into account your investment objectives and level of experience before trading, and if necessary, seek independent advice. Please read the full risk disclosure. So, admin is out of the way. So here's me, Andrea, a market analyst here in HFM for 6 years now, active in the industry for 10 years now. Oh God, that feels a bit old. So yeah, sciences was my bachelor degree, so emphasizing on mathematics and physics and natural sciences. But anyway, just to keep myself and go into the actual topic. So usually I'm doing these webinars every end of this November, just to inform you in regards to the December's seasonality effects. And also I'm doing the same webinar but for January's effect, like in the mid or end of December. So I'm gonna have the January's effect webinar within December. Just a second. Oops, here we are. So this is what we're gonna cover today. As I said, it's all about seasonality, and uh, uh, we're gonna see the factors that tend to help in this pattern, if we can call it like that. Today we're gonna emphasize only on December's um, December's seasonality, which actually is regards to stock market. So we're gonna see some guideline principles, because traditionally two of the best months of the year, especially for stocks, is December and January. Okay, that's why we're gonna cover these two topics within December. But there is a but over here. Everything depends, or actually the characteristic of a seasonality has to do with whether we are in a bull or a bear market overall. So just a second, guys. Okay, so each year, okay, you know that the market, the stock market, because okay, this is highlighted. This is all about stocks. Okay, so each year the stock market tends to repeat some particular seasonal patterns, seasonal trends. So these seasonal trends have an effect. They have an impact on individual stocks or in general in the stock market as a whole. So when investors uh, have a thorough understanding of how these trends work, they are able to gain an advantage when it comes to trading or investing. Guys, no one reply me in regards to the audio. Can you hear me and see my screen? And someone reply a quick yes or a no. Guys, can you hear me? Just a quick yes. Just type on the question box that we have. Anyone? Thank you very much, Tilly. Thank you very much. So I'm good to continue. Just a second. So as I was saying, by having this information, this understanding of how traditionally the trends work, you will be able to spot whether that's the case this year or not, and you will have a slight advantage when it comes to trading or investing. However, just to highlight something, you should, and in general, the market participants, okay, should also realize that while trends can help predict with higher probability certain outcomes, performance can never be guaranteed. Okay. Oh, you're struggling to hear me. Let me increase a bit the settings, change a bit the settings. Okay, now I'm in full volume, I think. Yeah, so yes, so that's from my end. I maximize my my settings, dear Kumalo. So I'm just stating in this webinar what we have seen and identify and confirm over the years. Obviously, performance, as I said, can never be guaranteed. Especially you have realized the last 2 years that many things that we weren't really expecting happen, changing completely the picture in the market. So what I'm gonna do today is just present you some common seasonal trends, and if you spot something like that, then that would be brilliant. So common seasonal stock market trends are seen, as I said, in December and January. That's mainly the case. And also another seasonal pattern has been spotted before the holidays between May and Halloween. But that's done. That's behind us. We're gonna start today with the December seasonal trend. So just for your own information, why I have put Mr. Santa Claus over here, and I'm having this arrow to the upside in regards to stocks. So as I said, over the years, you know, the financial markets exist for more than 50 years now, maybe, yeah. So over the history, we have seen that stocks generally received a boost at the end of the year. That's why we name it Santa Claus Rally. Okay, so there is some buying activity occurring during the holiday season. So that tends to start, or has been seen usually starting from the Thanksgiving holidays and lasting through the end of December, which is how this trend got its name from. So based on, as I said, on years of research on the history of financial markets, for example, we have seen Dow Jones. Okay, do I have is this on my next slide? No, just okay, just a moment. We have seen, for example, Dow Jones advancing nearly 80%, 80% of the time during a Santa Claus rally period. That was based on a great analyst from JP Morgan called Macro Dion. So that's just something to be aware of. Sorry. So as you can see over here, from 1919 until 1996, December prices rose by nearly 60%. And if I just bring that up to date, you're gonna see that. Let me just. You know what? I think it would be more interesting if I go to my Dow, right? Where's my Dow? Here we are. And show you a more up-to-date example. Actually, it is correct. It's an actual data. So what we are having right now, last year, 2021, what we have in 2021. Let's see. And December starts here. So boom, a bit of a correction, boom, another boom. So it started here, that's December. Let me zoom in a bit so you can see it. I'm gonna take it just very, very briefly, just to show you more up to date, because the results that I had in my slides are based on the research that I had from JP Morgan, on the research that I from Macro Dion. So his study was for 80 years nearly, and he saw that prices in general in the stock market tend to rise by 60% of the time. But let's see, out of curiosity, how December's perform the last few years, right? So it started here and it topped and it closed here. So these 4 candles is our December last year. Boom, correct a bit, boom, boom, and it closed. So down, close another 2,000 pips higher. Let me go further back. Let me go to December's 2020. Let's see, where is December 2020? December 2020 starts here and it finishes, oops, it finishes here. So we didn't have a really impressive December in 2020. More or less it was flat. Let's move on further back. December 2019, what we have here? 2019. It started here and finished here. So we had another. So out of 3 years, the 2 out of 3 were positive. Let me do a bit more. Ooh. Oh, that was, yeah, that was in 2019. So over here we had a pretty, a lot of volatility on December during December. So that ended up actually a bit flat because it declined and then recovered losses. So it was pretty flattened. So we have so far is flat, 2 flat months and 2 positive ones. Where's so that's the other one, okay. 2017. Don't know whether I missed any over here, and it closed here. So a bullish, so 3 out of 6 of 5. Yes, 3 out of 5. I cannot go for the back. Come on. I can. Okay. Sorry, I can because it's I don't have this platform, this demo account for long. But in general, guys, it's just to show you that there is a very, very big percentage over the years that December has been seen as a positive month. Now you can tell me, but Andrea, you didn't show anything interesting. Okay, you said that over the years the study shows that is mainly positive. The majority of Decembers over the years is it tends to rise. But how can I tell? So the thing is not just it has been proven a, 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 a bullish month. It has been proven a bullish month, okay, in a strong month, particularly if we have a bullish year as well. So what happens if we have a bearish year? Okay, so just bear with me. Over here, now I want to get back to this later. Okay, yes, I have skipped a slide and we'll get back to it. So here it is. And I'm not referring only to Dow Jones, guys, okay? In general, the stock market, okay, the biggest stock markets, biggest indices in the world, obviously, are the US ones, Dow Jones, NASDAQ, S&P 500, etc. So you can see that over 70 years, 70 years, the average December price change was mainly positive, with the only exception between 1930 up to 1939. I know you will tell me, but these are very, very old data. That's the study. I didn't want to, I wanted to base my presentation on proven research, on a confirmed research, um, research that has been um, um, approved and etc. So that's why uh, I use um, I use this as a quotation. So you can see that with an exception in 1930 up to 1939, the most of the time December is on a rally. Now it has been proven. Now if I take it to nowadays, okay, in a more recent data, if I go up from 1970, okay, up to date, we have seen that 41 out of 47, sorry, that's from 1970 up to 2017, okay, 2017. I will change a bit these slides somewhere. I will bring them up to date. I will change the mistakes that I have just spotted. Don't worry about it. Where's my, come on. Yeah, okay, perfect. So from 1970 up to 2019, okay, 2017, sorry, we have spotted that 41 out of 47 Decembers were in a rally, have risen. 41 over 47. So 87% of the time. And we have seen that by monitoring FTSE, USA 100, Dow Jones, and the Nasdaq, okay? The only exception, okay, the only exception was in 2018, okay? So in 2018, yeah, in 2018, we have seen S&P 500 drifting lower by more than 9% in December, okay? The next year, in 2009, we had a really low, a really strong rally with S&P boosting and rallying by nearly 24%, and Dow Jones more than 20%, nearly 20%, sorry. So seasonality is there. The only thing that we lack is what we should do. First of all, is identify whether we are in an overall bullish year or bearish year, because things change, and whether we're gonna get the signal, okay, by monitoring the daily or even weekly candles to in order to spot whether we are in a Santa Claus rally, okay, or whether we will end up with an exception and a flat or even bearish December. So you shouldn't take all this for granted, right? Nothing is guaranteed. I'm just informing you about the history. I'm informing you about some characteristics that we spotted, the probabilities based on research, just to be aware. Because if you are aware and you have spotted strong, very convincing, trustworthy signals, you will be ready. Okay? But it's not only that, guys, okay? It's not only that. You might not be interested in this kind of info. You might be intraday traders, scalpers, etc. There are some particular dates during December that are considered to be the best days of the year. So look at this. So it doesn't matter. I mean, if you're someone that isn't really keen on keeping its trades open for days, weeks, and etc., then it's okay, because um, there are 5 out uh, of 10 days, best days of the year, are actually in December. The very 2 final weeks of December are considered to contain some of the best days for the stock market. So, and that's not only December, actually, over the seasonality, we can see seasonality, as I said, in January, in April, in August, and in December. So we have 4 positive months, or months that they tend to be positive for stocks over the years. However, 5 of the best trading days of the entire year are in December. All of them after December 21st, and there is a reason for that. So it's the 22nd. So 22nd, 23rd, 24th, 27th, and 29th. Stocks generally, okay, as I said, tend to receive a boost known as Santa Claus rally. So this buying activity that it tends to occur in December tends to start from Thanksgiving until the end of December. And as I said, there are reasons for that. But let's move on to see more data. I did mention we have seen so far the research from 1990 up to 1996. We have seen research from 1970, right? 1970 up to 2018. That the only exception was 2018, and 41 out of 47 months where the stocks were in a rally in December. Just 7 out of 47. So imagine. And I will show you another. I will put you another an extra info here with 2019. So after we've seen 2018 being an exception in which the stock market declined in December, even though it was a bullish year, okay, the 2019, so the year after, the following year, we have seen a huge rally in the stock market, like a complete recovery of the equity market, with 2019 um, posting a bull run for the equity market. As I said, S&P was up by 24% that year, Dow Jones nearly 20%. And if we just emphasize in particular months, we're gonna see that the rally, there was a rally by 3.45% in November, and is up over 6.8% that quarter. Okay. So one of the reasons for December's strong performance, sorry, is the below average chance that the bear market downturn will be in progress as the year draws to close. Okay, what I mean, let's take it one by one. Okay. So the December is the very final end of the year, is the very final month of the year, right? So there is a lot of repositioning, closing of position, opening new ones for the year ahead. Okay, so a reason that we tend to see a bullish December is in an attempt to recover if the equity market had been overall bearish the whole year. Okay, or it has been below the average price, take into consideration the whole year. So here I want you to emphasize on this. Here is the scenarios when we had a bull market, and this is the scenarios when we had bear markets. Okay. So can you see that? You emphasize here. Okay. So this is a performance, particularly in December, in bullish or bearish years, bullish or bearish markets. So what that presents, what this data, this little table presents. The interesting thing about this table is the fact that it has spotted firstly that when we are referring to bear markets, this is something that starts from the mid of the year. So this is something that we tend to see traditionally in the mid of the year. So if we have a sorry, if we have signs of a bear market in December, okay, So the opposite of what we said so far, not the Santa Claus rally, but the vice versa. We tend to see relatively small declines, typically, okay? While if bull market December, if we are in a bull market, okay, in December is in a boost, and we are in a bullish year, if we see decline, it will be small, it will be around 1.30%. Do you get what I mean, or you are confused a bit with this data? You with me? No, yes. So what I'm trying to say, guys, if overall we are in a bullish year, okay? I mean, let me bring up my my chart. This is Dow Jones. In 2020, okay, it was a really strong, really strong. I'm gonna put the weekly chart on just to see more data. So in 2020, after the dip that we have seen in the first quarter, the rest of the year was in a strong rally. So if we have an overall bullish market, okay, we have seen this equity markets being in a rally the whole year or the majority of the year in an uptrend, then December tends to be positive as well. But how can I get back? Let me get back again. But here we are with a really nice and strong percentage, a strong boost up to 3%, 3.549 according to the performance for this period. Now, if we are in a bear market, but we have signs of a strong December, maybe bounce in the very first week of December, etc., then we could end up again with gains up to 3%. Now, if we are in a declining year, okay, the best case scenario is to have just 1.30% decline. The worst case scenario is to detract by as much as 3.59. That's based on the particular research, of course. Now, let's move on here. And I'm quoting this again. If we spot a bear market in December, it tends to have relatively small declines, typically up to 3.59%. If we are in a bull market December, that's a typical decline in around 1.30%. So, spotting December's bull or bear market. So if you cannot really figure out, you cannot spot a trend, then this typically tends to mean or tends to apply to a December bearish market. Okay, if no trend found, that is strongly associated with December's bear market. But typically, if we see a bearish November, so we have November declining by as high as 1.57%, no more than 1.57%, or increases by as high as 4.87%. So within this gap, if we have a November that is within this range, then we might have an indication that December will be strong, will be bullish. Okay, so no more than 1.57% losses in November, or if we have a bullish November, it shouldn't exceed 4.86% gains. If we are within this range, then typically December tends to be bullish as well. So you need to put a note, or you can go back. The very final day of November is tomorrow, right? Tomorrow we're gonna have the month end, and you can check your stock market and see whether November has been within this range or not. But be very, very careful. When November declines more, that's typically the case, okay? Based on researches, okay? Nothing is guaranteed. You need to stick that on your head, okay? This is based on the researches, what they have spotted, some patterns they have spotted, okay? It's no guarantee. At the end, you need to trade what you see, not what you think. Can you please provide us notes in this presentation of this? Yeah, sure. Give me a second. Sorry to put it on. Just now. Give me 5 seconds, dear Innocent. Here we are. It's available in the handout section. Can you see it? Okay. Let me know if you cannot see it, Innocent. It's there in the handout section. Now, what I was saying, be careful. If November had a really, really sharp decline that was greater than 1.72%, so a big, big loss higher than 1.72%. This is tend to associated with a bear market more than half of the time. So over the data that we have experienced, over the 70 years of study, it has been proven that if November has declined more than 1.72%, then this is associated with a bear market more than 50% of the time. It's not an evidence, it's not a conclusion evidence, it's just what we have observed over the years. Now, as you know, every single month can be split into quarters. First week, second week, third week, fourth week, okay? So it has been seen, it has been that typically the first quarter of December it posts some frequent losses, while the final quarters, so the third and the fourth, are usually the profitable ones. That's why I mentioned before, you're gonna get signs whether it's gonna be a bullish or bearish December by monitoring the performance in the beginning of the year, in the beginning of the month, and also by checking November's performance as well. So, and remember that 5 of the best trading days of the whole year are in December, after the 21st. So within these 2 quarters. And more precisely, from the mid of December up to January, it considers to be, or it tends to be, the most profitable stretch of the entire year. Now, and here are some charts from Financial Times showing that the odds of the price rises in December are higher in the very final 2 quarters of December, the third and fourth one. Let's move on. But okay, this is just research. This is just some conclusions, some patterns that have been spotted. Okay, in order to improve your odds of identifying a bullish or a bearish December, okay, you need to obviously study your trend, study your chart your candlesticks, the daily and weekly one for December. Now, here is another research, okay, by Financial Times. It's taking us back to 1922. So since 1922, to be more precise. So I have splitted it, okay? I don't want to spend a lot of time though in over here. I prefer to emphasize, okay. As you can see over here, for 22 years, 10 out of 12 months where there was a rally in December. Over here, for 16 years, there was a rise in November and end up with 28 out of 29 Decembers to the upside. I don't want those, these are just data, so I don't want to spend your time. I will just emphasize on this red flag that I have put on over here, 1933. So, so something that you could put as a note, okay? Is we have seen November, right? We have seen how you could check a bit November's performance, but October is also something you should consider because October traditionally tends to be one of the worst months for stocks. Okay, so a rise of as low as 0.90% and as high as 14.50% in October or November, 17 out of 20 times tends to end up with a bearish December. That's just an info, okay? Just to monitor also the, as I said, whether we have a bullish or a bearish here is something that we can monitor by monitoring the performance since the mid of the year. But yes, October tends to be a very important important month for the stock markets, and it is also called, it is very well known as October effect. So October effect, what that means, it means that there tends to be a market anomaly, if I could say that, with stocks declining during the month of October. Yeah, just along with September's effect, obviously. That's something has to do again with seasonality. So October effect is the perception that stock market decline during the month of October and is classified as a market anomaly. It's one of those. So if you had to remember, if you had to be aware for some of the most important seasonalities that we have or market anomalies that we have in the market, it would be October and September effect and Santa Claus rally. Okay, that's why if you prefer, the very final quarter might be the most important one for the whole year. Now, let's move on. So let's split December into quarters. As I said earlier, the December first quarter, so from the 1st of December up to the 8th, inclusive the 8th of December, it tends to be one of the worst quarters of the month, with only 40% rise based on the research that we were studying. And particularly the 4th of December It has been seen as one of the worst days of the quarter, with a possibility of a rise, of a price rise, by only 35% of the time. Okay. Yeah. So here, these pictures present the odds per trading day from the first up to the 8th, and you can see that they are very, very average to low. I mean, the maximum is 55%, which is pretty much 50-50 whether we're gonna see a rise or a fall. That's why we say that this is the worst quarter, because we tend to see a decline in the stock market. And if I just what we have over here, sorry, that was in 2019. Oops. What we have over here, the first was here. Indeed, the very first 3 days of December, first, second, and third, we had huge dip. And the fourth, it seems that it found some floor over here. Do I have another one to check, just out of curiosity? So the first, the 6th of December, first. So here we had something vice versa. The very first 4 days were in a slight rally, but then it stuck, it struggled. And let's see the 8th. Here is the 8th. So it was stuck. The rally was paused. And do we have another one? So let's see. First here. So the very, very first day of the December last year, we had a very big dip and quickly revert, another dip, and then boosting higher until the 8th. So that was a nice indication that since the first quarter of the month started so strong, then it was an indication that we will have a nice rally in December overall. So that's why you need to go in the depth of it and monitor the daily candles afterwards, just to figure out whether we're gonna have a flat, bullish, or bearish December. Now, let's move on. Let me get back to my slides. But as I said, usually it tends to be a quite weak quarter. The very first few days, they will indicate how that will be. The second quarter is where you need to be extra careful. It has been seen that the odds, again, are 50-50. So only 56% rise has been seen in a period of 60 years, with 9th being the worst day of that quarter, either if we are in a bullish or a bearish market. 10th and 11th also dangerous days because the odds are also weak. Okay, and 8 out of 9 times it has been seen that the 13th of December, it was a relatively good day. But I want you to emphasize mainly on that. That's the important. That over a study of around 10 years over here, that's an example of just 10 years, 10 Decembers, the first quarter was mainly negative. Okay, the second quarter the same, relatively flat, because just 0.15% is nothing. But the final two quarters were the ones that they posted the biggest move, and it was a positive move. So this is the highlight that we said of December. The final 2 weeks are the ones that tend to matter the most. They tend to be the start of a profitable stretch if it's proven to be if the bullish bias is right, is increasing or something. What I want to add over here. So just highlighting a bit the percentage, you can see that especially in the 22nd and 23rd of December, we tend to see a very, very big percentage of odds for the price to rise higher, with 70 up to 75% of the time. Even in the worst ever decades, such as back in 1960, okay, the third quarter of December, we had 6 out of 4 to be up, and an average rise by 76%. What else I want to spot over here? And the very final fourth quarter, which starts on 24th of December and ends in the very, very final day of the year, 31st, it considered to be the best season of the year, the best days of the whole year. And as I said, includes 3 out of 10 of the best days of the whole year, with 80% of the time price finding a boost. And that's why we call it Santa Claus rally, because it's just before Christmas, 3 days before Christmas, and we have another day which is between Christmas and New Year's. Okay, 2 days, sorry, 2 days between Christmas and New Year's, the 27th and 29th of December. So 24, 27, 29 tends to be 3 of the most profitable days of the year, with nearly 80% or even more than 80% chance for the price to move higher. Obviously, we have seen an increasing bullish bias in December. Yeah, so obviously, as I said in the beginning of this session, the performance cannot be guaranteed. This is based on the studies, some patterns that has been spotted, but at the end, you need to trade what you see and not what you think. And this is some examples, some risks that we have spotted, and they had changed the market or affected the market. Okay, this is an example for 2019, but I'm gonna bring that up to date and highlight that things are not so different. What I mean by that, we still have a lot of things going around, either in geopolitics, politics, banks, inflation, rising inflation, tightening, etc. So there are a lot of things that could pose a potential boost of potential rise in December, or whether they could end up pressuring December lower. So you need to keep yourself up to date with the economic events, political events, headlines, and obviously to monitor your candles, because this could change what is driving currently the market as we're moving into the year's end. And some examples that I have put on that affected, just examples of back in 2020 and 2019 are these. I mean, the banks, whether they are surprising or not, whether they have any change, whether they are tweaking their outlooks, whether they're upgrading or downgrading, and whether an outlook tweaks of this for the central banks. Uh, uh, um, okay, back in 2019 we had the elections in UK that had an impact in pound and FTSE. OPEC as well. This is something that we will monitor this December as well, because in the whether they gonna that will change the global demand and the energy market in general. Um, Economic data and what they were gonna hint for uh, for the global recession. So all these all of these are things that you need to keep yourself up to date, and along with monitoring your trend in the very, very first few days of December. So December starts on Thursday. So we're just a day before the very first day of December. For the time being, okay, we have seen a pullback. We have seen, if I just, I should, we should monitor, we should check October and December. October and December this year have been seen in a rally, okay? So it will be good to monitor what, to check, to review what I said earlier in regards to how much December has been rise and how much December doesn't, sorry, how much November has rise, okay? It will be the very first thing that we could check. Now, we need to obviously wait for November to finish and later on to monitor the daily candles until we have a further confirmation signs on whether this might be another Standard Cross rally or not. But overall, the year, overall in 2022, just, oh, sorry, let me fix a bit my chart. uh, we have been in a bearish year, but that end up with these last months, 2 months, reverting the majority of the losses that we have seen the whole year. So that this December will be very, very interesting. Okay, so yeah, that was pretty much from me, guys. What else was there? So what else? That was pretty much it. So that's just general information in regards to how December is split, the December performance. I mean, the sectors that tend to be positive in December and the sectors that tends to have the worst performance. But that's just for your own information. So that was pretty much it in regards to the Santa Claus rally. Take care, because this week we have the beginning of December, and right now where we're standing is in a pretty sharp rally since the beginning of October. So October and November were quite strong months for equity markets. So it will be very, very interesting to see. It would be very interesting to see how the November close, and how will December, how the very first few days of December will perform. Is this gonna be a correction, or are we gonna end up having another boost and strong December? In a pretty mixed year overall. So I remember that I mentioned that it has recovered a majority of the losses. We had been in a bearish market until October, recovered the losses that we have seen for 2 quarters in a row. That was pretty much from me, guys. So I'm gonna call it a date. If there are any further questions, now is the time um, to stick your question in the question box. If not, I will move on. I will call it a date. Sorry. And yeah, as I said, you can find us in social media, in webinars at agefm.com email address, which is the whole analysis team replies to that email, and you can stick your question, you can put screenshots on, etc. And we can help you with anything that bothers you. Okay, okay. Thank you very much for attending. Have a great day ahead and see you again tomorrow with a live analysis, okay? Take care. See you. Bye-bye.